Welcome back. Now let's get into that market picture, starting off, of course, in the Far East, where Asian markets mostly rose on Tuesday, but gains were limited, with investors trading uneasily as they await the conclusion of a crucial Federal Reserve meeting happening this week. Now, while geopolitical tensions and the China-US trade war continue to make waves, the key focus for now is what that U.S. central bank plans to do with monetary policy, as the tariff standoff shows signs of impacting the world's top economies. Now, the latest week data saw manufacturing activity in New York State plunge into contraction this month and hit its lowest level since late 2016, reflecting steep drop-offs in new orders, backlogs, and even employment. So the Nikkei in Tokyo fell off 0.7% at close, while the Hong Kong's Hang Seng managed to gain 1.2%, a big lift on that front. Slightly positive day as well out in Shanghai. The composite there just below the 2,900 point mark, going up just around 0.1%. Head on over to the United States now, where Wall Street stocks advanced last night. Ahead of that anticipated Federal Reserve meeting, there was a big gain in Facebook, which boosted the Nasdaq, of course. Now, the company jumped 4.2%, a lot of that on the optimism of its strategy to launch what was a cryptocurrency payment program on its platform. Whether that'll help, we'll only find out. The plan is expected to be unveiled today. Other large tech companies also advanced, including Apple, Amazon, and even Netflix, lifting the tech-rich Nasdaq composite 0.6% to 7,845 points. The Dow Jones Industrial 0.1% higher as well, while the broad-based S&P 500 also added a similar mark, 0.1%. Investors increasingly confident that the Fed indeed will cut interest rates in the near future in light of a weakening economic outlook, which is due in part to the hit from the US-China trade war. Let's quickly check in on how the markets as well are faring on the whole. Of course, the likes of the European markets have certainly been those in question, but it's an all-green day across the board today, taking a little bit of positivity as well, flowing through from the fact that the Fed is, of course, been given some sort of hope that they may indeed cut interest rates in order to boost an economy that is clearly struggling. Yes, unemployment may be at all those lows, but it has been difficult to keep things at those levels. So certainly interesting that things continue to flow out into the rest of the world as well. On the local front, that is, then the JSE also headed higher today, even if it is just a touch, around 0.8%, now headed at 58,446 points. Industrials also headed higher, considering that Tencent did very well in Hong Kong earlier this morning. So that means Naspers on the local front has also gone up, and that means the industrials as well have been pushed a whole lot higher. The banks and insurers going up today, and a good tick up for Old Mutual, despite the happenings going on at that company. And I'll explain a whole lot more about that in just a bit, of course, with Peter Moyo, the CEO, having been officially fired. Continuing to check in on the sectors as well, though the resources unfortunately not doing as well as one would have hoped. Of course, negativity in the sector continues to be the order of the day, and now taking another hit is certainly the cause and case rather for the resources sector. Continuing to check in on, however, the commodity picture, you'll see that gold continues to head higher, firmly above that $1,346 a fine ounce mark. The difference between the two, of course, the two metals, is still over $500, and that is considered to be a huge benchmark, as platinum is hopefully headed in the right direction as it goes up. And look at that oil price, just above that $60 a barrel mark. That would certainly bode well for South Africa, possibly a 90 cents drop in the price of fuel if things remain as they are. We're hoping that the rand just strengthens a little bit more. 14.64 for that rand, then against the US dollar, 18.35 for a British pound, and 16.40 against the euro. Let's get on top of another story now that we've continued to unpack of late, and one that is of keen interest, of course. It is the resignation, or rather the suspension, of Peter Moyo as CEO of Old Mutual. Now, of course, this is a big deal. And why is it such a big deal? Because at this point, Old Mutual have decided to part ways with CEO, announcing that today that Peter Moyo would now be terminated as CEO, and we'd certainly see a new CEO come to the fore soon enough. So what is the scenario that came to the fore? Well, NMT Capital, which is a company that was co-founded by Peter Moyo alongside Sango Ntsaluba, of course, who is the founder of Sizwe Ntsaluba Goboto as well, co-founded a company called NMT Capital, and they founded that company in 2007. Since the company's inception in 2007, Old Mutual has remained an investor, of course, in NMT Capital, particularly Old Mutual Life Assurance, which owns 20% of NMT Capital. And let's remember then, just in 2017, late 2017, we saw Peter Moyo become the CEO of Old Mutual. So this was already disclosed and declared when Peter Moyo rejoined Old Mutual back in 2017, first in their emerging markets business and then later on as CEO. So how did things develop? What actually happened after that? Knowing the structure, and if we move on to the next board, you'll see that NMT in 2018, in their financial year in 2018, decided to pay out an ordinary dividend of 115 million rand. And I say specifically ordinary dividend because there are two sets of dividends that are given to shareholders. There are preference shares, and those are usually the investors that get paid out first because they have a preferential treatment. And then you have ordinary shareholders who then get whatever is left of the profits. So 115 million rand profit was given out in the 2018 financial year. Of that ordinary dividend, Peter Moyo stands to get 30.6 million rand of that. But here's the flaw. By the end of the 2018 financial year, Old Mutual, as a preference shareholder, of course owning that 20% in preference shares, was owed money, and that money had become unpaid. So the question becomes, how then are you able to pay an ordinary dividend if you haven't even given money to your preference shareholders? And of course, with Peter Moyo standing through, of course, as the CEO of Old Mutual, he should be looking out for the fiduciary duties of both Old Mutual and then, to the latter part, NMT Capital. So the board then goes out on an explanation today and says, the board was not given any acceptable explanation why ordinary dividends were declared while debt to Old Mutual was outstanding. On the 23rd of May, upon a whole host of discussion, the board concluded that a material breakdown in trust and confidence had been found, and Peter Moyo was then suspended on the 24th of May. And since nothing has come to the fore with regards to finding an agreement with regards to the suspension of their clause, you'll see that in the next one then, they decided then to, of course, part ways, and Moyo given notice to terminate employment on the 17th of June 2019, which was yesterday. How far the scenario goes is perhaps a question that we will all put to the lips of analysts such as Chris Gilmore, who joins us now live from the Johannesburg Stock Exchange. Chris Gilmore, thank you so much for the time. That scenario then with Old Mutual is certainly one that is going to be put into question for quite some time. Was Peter Moyo wrong?
You know, good afternoon, Arabile. I think you've explained it extremely well, and you've got all the salient points. Was he wrong? Now, look, the Old Mutual knew perfectly well from day one what they were dealing with here. They knew that there was a potential conflict of interest here. However, the fact of the matter is that Peter Moyo is a director of this company. He's a founder and a director of the company. And the board of directors saw fit to bypass the payment of a preference dividend, but at the same time pay the ordinary dividend. No, you can't do that. I mean, you really cannot in all conscience do that. As you said in the preamble, the whole bit about being having a preference dividend is that you get it in preference to the ordinary dividend, to ordinary shareholders. So this always had the potential to be a difficult arrangement because of the fact that although he disclosed it, there was always the potential to do this. So I can understand clearly why the Old Mutual have done exactly what they've done. But it also raises the broader issue of potential conflicts of interest, particularly with CEOs who have, how can I put it, executive responsibilities over and above what they've currently got with their own company. So, for example, it's not a problem having a non-executive role in a variety of companies, as many CEOs of companies do. The moment you get something as direct as this, then you're opening yourself up to all sorts of accusations of conflicts of interest. And here, there was a clear conflict of interest.
Yeah,
and
so
I
we
can understand exactly why Mutual done what they've done.
Yeah, so we're basically putting out then that Old Mutual is in some ways to blame because they should have been more aware of the scenario, I suppose, knowing exactly what the situation is between NMT and Peter Moyo. The relationship between the two dates back to before Peter Moyo was even CEO of the company. So clearly this was still always in the books. Where does it go to, though, from here? I mean, does Peter Moyo then seek reparation? Should he just be paid out? How exactly does this go back and forth, perhaps, from here is what investors and the community at large will want to know.
Well, we don't know if any kind of agreement has been set out between the Old Mutual and Peter Moyo. In my experience, people are very rarely suspended with nothing. So I suspect some sort of golden handshake will eventuate, but I don't know, and that's just supposition on my part. He's been amply rewarded by NMT, and as I say, I think it's that was what caused the problem. So if I look at it as dispassionately and as factually as I possibly can, I would say Mutual was probably in the right. To come back to your earlier point, they monitored this thing over the past couple of years, or the past year or so that Peter Moyo has been the CEO. They monitored it very, very closely. And, as I say, they knew all about it. And I think they obviously felt that he had probably gone just one step too far with all of this, to allow a situation where you let an ordinary dividend be paid in preference to a preference dividend, which is ludicrous. That just was never going to pass institutional muster. So where does it go from here? Frankly, I don't think Peter Moyo's got a leg to stand on, and I think the way that Mutual has acted, they've acted now pretty decisively, and we'll wait and see whether he'll go and take this through the courts. I'd be very surprised because I really don't think he's in the right at all. That's just my opinion.
Yeah, look, he might walk away with a handsome paycheck and, of course, the money that he still gets in dividends from NMT Capital. So perhaps it isn't a bad time to just bite the bullet and head out the door in that regard. Very quickly as well then, Chris, of course, we still have that Fed Reserve meeting that is coming out, that starts as well later today. A lot of expectations that we'll get a cut in interest rates, perhaps later on. Does this meeting pave the way for an interest rate cut? Do you feel that there is enough in that U.S. economy to cut interest rates?
Jay Powell and the U.S. Federal Reserve, the Federal Open Market Committee, they're having their meeting today and tomorrow. And I doubt that they're actually going to cut rates. They're probably only going to cut in July. I'm looking for 3 cuts between now and the end of the year. And at the end of the day, obviously, the South African Reserve Bank is going to look at this very, very closely. If you look at where interest rates are in South Africa, they're extremely high. And I think that's one of the reasons why we haven't seen an exodus of funds out of the country. In many ways, you can argue that those naysayers, those people who are arguing that we're probably going to get a downgrade from Moody's, have already discounted such an event in the relatively high yield of the South African government bond. So it puts the South African Reserve Bank in a very interesting position. Not a position that I'd want to be in, I must tell you. It makes Lesetja Kanyago's position very, very difficult.
Yeah.
So if the U.S. Federal Reserve cuts in July, as I suspect they will, not today, but not this week, but in July, then I think most central banks around the world, there will only be a very few exceptions, will feel obliged to follow.
Sure.
And much will depend on the timing. If we actually do physically get a downgrade from Moody's, and much now is going to depend on action rather than words. We have the State of the Nation address on Thursday, And are we going to get any real action coming out of the Ramaphosa administration? We've had a lot of talk, a lot of good intentions, but now we need to see some action. The ratings agencies, if they don't see action, I think all of them, including Moody's, will take a very, very adverse view of things. So if that happens, to answer your question in a rather roundabout sort of way, if that happens, then you might not get the kind of cut-in rates that people are looking for immediately, and it might only be delayed till later in the year, maybe closer to the end of the year, that you physically get a cut.
Chris Gilmore, appreciate the time there. Independent analyst joining us live from the Johannesburg Stock Exchange. Positive sentiment for the JSE, but a whole host of news, of course, coming to the fore when it comes to the local front and, of course, internationally as well. We'll keep abreast of that interest rates decision by Jerome Powell, which is expected, of course, tomorrow late in the day. We'll have that for you as well as things proceed. For now, let's have a quick break.